today we're going to be talking about captive insurance companies. So if you own, manage and operate a farming business in Latin America, in any of the Latin American nations, a captive insurance company can be of tremendous assistance to yourselves. No matter if you have a farm in Brazil or Colombia or Chile and you're exporting a lot of produce, whether it be agricultural vegetables or whether it is things like commodities, dry commodities like soybeans and oats and things of that nature. If you're exporting and you're an exporter, then you're doing lots of international trade and international transactions. You're also dealing probably with your buyers. You're transacting probably using letters of credit. And so we're going to talk today a little bit about how captive insurance can really help you in a number of ways. And it can do a number of things. One, it can help you raise capital from international investors, because a captive insurance company can be attractive to international investors. Second of all, it can reduce the cost of your performance bonds, your insurance that you need for transactions. So if you're doing hundreds of millions of dollars or millions of dollars of transactions per year, where you're exporting goods overseas, of course, you know, as a seller, supplier, exporter, you have to get performance bonds, and performance bonds are a form of insurance, and there is a cost to that, and so you can reduce that cost by using a captive insurance company. Third point is the cost of documentary letters of credit. So if your buyers are issuing letters of credit, or if you are a broker in the process, working with suppliers and exporters of products, you can reduce the cost of documentary letters of credit, and you can certainly improve your credit situation and your protection in each of these deals by using a captive insurance company, because some captive insurance companies can issue instead of documentary letters of credit, you could use something called a surety bond, and a captive reinsurance company or insurance company could be set up to do things like issuing surety bonds, which are reinsured. And then finally, there's asset protection. If you own an asset protection, if you own a captive insurance company and you are using that, then, and you own it and you own shit, it's a company that provides captive insurance, and the way that works is that you will have a fair amount of asset protection, because all the assets that are ultimately held in the captive insurance company are separate from the main operational business that you have going on. And what you can do is put those shares into a trust, the right type of trust for you, given your family, given the circumstances, and then you will basically have a good form of asset protection. So that's it for now, and we'll continue on in the second video. Thank you.